All right, let's take a look at our top story here this morning. It's still Alibaba, which continues to sink in Hong Kong. That stock, after it walked back its plans to spin off and list its $11 billion cloud business. And this comes with Alibaba and Tencent losing China cloud market share to some of the three big state-backed telcos and Huawei. Kind of lets you wonder what led to this sort of pulling, right? Let's dig into this with Bloomberg Intelligence senior analyst Robert Lea and our chief North Asia correspondent Stephen Engel. Steve, I'll start with you. How do we get here? What happened?
You know, Alibaba's been trying to regain its footing since the 3 years of the pandemic and the 3 years of the regulatory anti-monopoly crackdown that really dismantled its prime way of doing business with merchants and, of course, shoppers and the like with its pick one from two. That has been dismantled. And again, they're trying to really build out its cloud division as well in the aftermath and kind of not necessarily rely so much on e-commerce. It was the second biggest revenue generating division, $11.3 billion, still dwarfed by e-commerce. But again, it was a future growth driver. And then we had in May this restructuring into basically 6 divisions. You had Daniel Zhang, the chairman, become the head of the cloud division. Suddenly then in September, he was no longer a part of the company anymore. So there's been a lot of tumultuous restructuring of the company, and now it seems a restructuring of the restructuring, as Duncan Clark told us last hour. And the big question is, what is the reason? I guess the convenient reason, and that's what Joe Tsai, the chairman, said on the analyst call, is that, look, these chip curbs from the United States, this is going to hinder us going forward. But how much do we buy that? Tencent just 2 days ago said we have enough stockpiles of NVIDIA H800 AI accelerators for at least a couple of generations. Is that the real reason? It's a convenient reason.
Yep.
The real reason might be pointed to some of the research to that man sitting right over there off camera. He can tell us about how they're losing. Okay. They've been losing share, haven't they, Robert?
Robert, I just want to also add to this. I mean, you know, you're not surprised by this either. And it goes to what Steve's alluding to, of course, is that British comedy satire, yes, Prime Minister, when they said, well, they said it's about the tech war with the US and China, so it clearly can't be that reason.
Yes, there's that's a good way of looking at it, and I thought I was cynical, Stephen, but I think obviously it clearly is a surprise to the market. Look at the share price action overnight and today. But the warning signs were there. As you said, Daniel Zhang, walked away from what would have been one of their biggest spin-offs and IPOs. He did that within a matter of months of being appointed as CEO. So that was a initial warning point. The second one being, if you look at the growth numbers that Alibaba Cloud's been delivering, the revenue growth for the quarter they just reported last night was 2% year over year. This is supposed to be a growth business. IPOs are growth businesses, so clearly the growth isn't coming through. The prior quarter to that, the business grew revenues at 4%. So this is actually a deteriorating growth story.
Yeah, and I think in some of your research you said they're going to be mired, the cloud division is going to be mired in losses through 2024. We knew it was loss-making because they have to invest a lot. But can we draw from point A to point B and essentially say that they're losing this share because of a priority in national security, data security, and state-owned enterprises are maybe the better steward of this kind of development in AI than a private company like Alibaba?
Well, exactly. I mean, the relationship between the private companies and the government is clearly on better terms these days. However, in a country such as China, where the government takes a very strong hold and has a controlling influence on many factors of life and the development of the economy, the government is very actively involved in the rollout of the national digital infrastructure. For example, they recently rolled out a new data center which has a million servers at one site alone. So the scale of the resources that's being put in at a national level is significant, and therefore it's unsurprising the state-aligned vendors, the 3 national telcos, China Telco in particular, and Huawei are taking an increasingly active role. Another thing I think that's worth saying is that in the early days of the cloud rollout in China, it was more focused on the internet sector, which is an area that companies like Alibaba and Tencent obviously have got core strengths. But now the growth is being driven more within the SOE sector. Again, it makes sense to have SOE aligned companies who understand that sector at a more deeper level take the lead there. So again, the telcos really seem to be in the driving seat at the moment.
And it just goes to show how competitive AI is right now in China. Are we likely to see some sort of price war?
Yeah, well, I mean, we're almost in that at the moment, and the quote that's been bandied around in recent months, the war of 100 models. Again, I think, as I've mentioned before, the technical barriers to entry in AI are not particularly high on the software side. Whilst AI does have great promise, it will transform various sectors. There's huge efficiency savings, cost savings to be brought, but it's not actually that hard a technology to get into. And the fact that everyone and anyone in the China tech world has a large language model sort of tells you that. And this is something we've seen in China. Again, look at the solar sector. It got flooded with supply. Capital is so freely available. It just plunged it into loss. It's happening, LCDs, it's happening LEDs. Large language models in China, it seems to be following that pattern again. Here we are in a hyper-competitive sector flooded with capital, and nobody's making money.
Yeah, other thing, of course, Steve. I mean, if you look in the e-commerce space, there's a lot more competition with the property and developers where they've reduced consumer confidence. It's a tough time.
Well, for Alibaba on the e-commerce, they're having troubles there, even though it's their biggest revenue generator. Because of the regulatory crackdown and the anti-monopoly push by the government, they've had to scrap their model where they pretty much strong-armed vendors and shoppers to pick Alibaba in lieu of the other competitors. And that's been it's great for consumers now, and it's great for merchants. They don't have to be strong-armed anymore. They can sell their goods wherever, and people can buy and even shop using an Alibaba payment app into Tencent and vice versa. So that's all good for the consumer. But what has happened is Alibaba's lost its dominant position in many places, and shoppers and merchants have gone to Pinduoduo. They've gone into more innovative and younger focused apps as well, like ByteDance Douyin, which is essentially TikTok, and other platforms, and Kuaishou and the like. So e-commerce has kind of gone into there. So Alibaba is kind of taking it on the chin on both sides of the chin, if you will.
What does it mean for the stock, right? I'm seeing a 10% drop here right now. I mean, there were a lot of hopes pinning on the fact that this was going to unlock a lot of value. Is the stock going to take a bit of a tumble beyond just today?
Yeah, I mean, it throws into question as well the overall viability of all the IPOs that were going to come, whether it's the Cainiao, which is the logistics arm they have applied. We don't know if this is going to impact the pricing of that IPO. We already know from the conference call, Fresh Hippo, Hema is pretty much scrapped right now, paused right now, and any kind of cloud IPO without a strategic goal. And that's another question, perhaps, if we have time, Robert, what's going to be next for the cloud division if it's going to have an IPO down the road? Where's the value right now, if it's just a loss-making machine?
Well, I guess I started my investing career in the small mid-cap world. At the end of the day, any IPO, there's got to be a growth story. What's the hook for investors? What's the growth story here? And at the moment, there isn't a growth story for Alibaba Cloud. It is a very well-positioned business. It's ranked number one in the sector. That's great, but it isn't growing. So to return it to the growth curve has to be priority number one. And then priority number two, again, if it's growing but loss-making, again, there has to be the hope of some return for investors in the long run. Yeah. So to get this thing to break even, at a conventional level, let alone all the adjustments that go through, and, to sustainably generate cash flow and profit, again, that's requirement number two of any IPO, let alone Alibaba Cloud.
Robert, you don't come on enough with us anyway. You must come on more.
It's been every day, I feel like, but no, it's perfect timing.
It's not enough.
I'm not quite sure how to say that, but I'd love
we
to.
start off with
Tencent,
and we actually talked about this yesterday during the Tencent earnings about that, and then this all happened. It's almost like, Robert Lea, thank you so much. Bloomberg Intelligence's senior analyst, Robert Lea, also Stephen Engel, our chief North Asia correspondent.